Hello guys, welcome to the Trading Parrot. Since Friday, we are talking about a breakout over the weekend on the 4-hour time frame. I want to talk about the breakout in retrospective, look at what was happening, recognize all the manipulation ongoing, highlight the mistakes, and put an emphasis on what was really mattering over the weekend. And not just that, we need to talk about what happens after we run out of this liquidity in the short term. There's a couple of theses that we need to cover. We need to look at the breakdown of the delta, the vacuum in fair value gaps all the way to 85K, and finally we have a delta in red. All of these things are extremely relevant for what's coming next. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And if you're wondering what happened with the video yesterday, that's because you're not subscribed to Coin Bureau Trading. I put 3 videos a week on that channel. On Friday, we put Worst Bear Trap, a video with a bullish bias. And on Sunday, we cover Stars Are Aligning, another video covering multiple scenarios, but still with a bullish bias. If you're missing those gaps, make sure that you're also subscribed to that channel. Saturday video made 500 likes on the Trading Parrot channel. Thank you so much for that. Mondays are tricky, so I hope you guys can give this one a like as well. So yeah, on Twitter, Telegram, and Instagram, all over the weekend, we were covering step by step how we were approaching the breakout. We covered this breakout. We said that it was quite a weak one with a low volume, still not putting a higher high after the breakout. Was looking a bit like a dodgy breakout to me. Yes, I kind of posted this at night, hoping that you guys can practice a bit and tell me what you were thinking about the breakout. And I did that right before going to sleep to read your comments in the morning. In the morning, we already had broken down and we were already breaking down for the second time on the second support. But all of this was happening within this symmetrical triangle. We were trapped on the weekend inside this, and I made sure that on Saturday and Sunday that you don't get trapped taking any breakout without a confirmation of a 4-hour candle close. And by the way, guys, make sure that you're following me on one of them, Telegram, Instagram, or Twitter, whichever is your preferred way to get notified, but the whole discussion is going on Telegram, be aware of that. And you can see that the symmetrical triangle spent the whole weekend trying to trap longs, early longs entering before a candle close. This was no exception on Sunday. I made you aware in the video that if you are too itchy and you really want to enter a degen trade in an intra-candle action above the breakout area, then make sure that you have a stop loss. Because in this case, you can see that after the video went live, price moved down almost 3%, making sure that all the over leveraged traders get out of the trade before we actually make the real move into the liquidity. And when I say liquidity, I'm talking about the short-term one that we've been monitoring the whole weekend. This was our bias. We say that below the price, these levels that are very close to the price are not quite heavy enough to be the final move, to be the final motivation for the market maker. I believe that the whole plan from market maker was to hit this level in here, but that doesn't mean that before they have the main plate dining, that they cannot just have a few appetizers before hitting the final feast. And my worry at this point in time is to keep an eye on whether we still have motivation to go in this direction. That's where we're going to spend the rest of the video looking for clues, because we want to be very clear and find a way to discard that the actual next target is not this one. This is 85K and it's pretty heavy, not just in the sense that it's red, but also that is surrounded by a lot of yellow as well. So yes, there is incentive in here, but we want to know what happens once they are done with this. Are they going to just put a new low and go to 85K? Or is there something juicy enough to keep attracting the price up? Let's look into that. So we got a few events coming in this week that could provide volatility, but none of them is really that important compared to what we had in the past week. We are on a November at 30%, at the moment almost 31. In 2020, we were at 42, but after a September that went down. So we've been 3 candles in green, and this is the largest one. And that is going to reflect on what we are going to look into the weekly candles and the monthly candle indicators as well. In 2016, November was plus 5%, and only December made that 30% move that we are seeing now in November. Extreme greed cooled down a little bit to 83. That is something good. From being at 90, I get very shaky when we are at 90 because that never lasts for too long. You can see it in here in the chart that covers from 2018, how much time we really spent above 90. And we settled yesterday the signal from Cerberus with a golden cell. As I explained, November golden cells, whether they happen 4 years ago, equivalent time in the cycle, or it happened in 2023, eventually there is some drawdown. Particularly in 2020, it was just a small one of 16 right before resuming the way up. And I think we have a chance to do that as well. But we shouldn't get really surprised if after a golden cell we see some drawdown at some point. So far we haven't seen almost any with just candles up on the weekly time frame, and as long as general markets don't massively crash like in the 2008 bubble, then we could see a 10-15% here and there at some point, maybe in November or in December. It could be a little bit more than that. I'm just saying 16% because that is kind of what we were used to see in the previous cycle. But going into old cycles, like in 2017, there are drawdowns of 20, 40, 35 within the bull market. Or in 2013, drawdowns of almost 80% in the bull market, with still going up, putting higher highs. And yes, CME gap got closed immediately. As soon as the market opened on the Chicago exchange, the price went straight back up to the level we mentioned. 92.2 is gone, and that's where the price went. Liquidity closed. That means that we no longer have, from CME gap point of view, any incentive to close anything here. We still have the 77K there, which probably market maker sees as challenging to get there. They're gonna need a big excuse, bearish narrative to do it, if they ever manage to do it. MACD is with the mouth massively wide open. As you can see, there's almost never a moment in the past year where we see the daily MACD looking so wide open. But make no mistake, a decent move can close the mouth, and we are getting higher than the highest level the MACD has been in the past year. At 73.5, the mouth was wide open on the 13th of March. And with just this big red candle of correction of 12%, we closed the mouth in 2 days and we started coming down to 60K. That was a move of 17%. So get used to something like that, not necessarily happening today or next week, but at some point. Keep it as part of your plan and don't get surprised with those things. And on the 4-hour, you can see we went above it. I already explained that, but we also trapped liquidity to the downside. This was the area that trapped the most shorts. People were saying, okay, that is it. We're gonna go now. And I get the point, because we were talking about the head and shoulders potentially pointing quite big down, right? That was somewhere where we talk about the target, but we also said we trade things with a candle close, and the liquidity hand happened intra-candle as usual, trapping all these people in here. And with that incentive at 92.8 that we took all over the weekend, it made it the perfect plan for first liquidating these dudes, then these dudes, and then those dudes. All liquidity taken. Perfect plan. The day that you can start thinking like them and come up front with what are they trying to do. And I'm not saying just looking at the liquidity, putting your long here and aiming for there, because you can see that although one day you might get lucky and it works, many times it won't work like that. They will first go for some more shorts to make this feast a little bit larger and juicier, and then they complete their job. At the moment, the 4-hour RSI, it's looking good by itself. You can see that we have a bottoming formation in here, which could potentially lead to further upside. But we are still on the hand for more evidence. We have managed to put a higher high on the RSI at 61. We are above the median. We have broken out. We have taken out all the early longs. And finally, we are starting to consume at that point liquidity to the upside. Now we need to see what's left above this, if there's incentive to continue putting highs on the RSI as well. On the daily, we seem to also be placing in here some sort of W bottom formation. It seems less significant on the daily. And remember that our thesis is still valid, and I'm still looking for a channel to the downside on the daily with cool downs. And this just means that we can hit highs like that, and then lows and highs like this, and eventually break out at some point later in December. But these moves in here just to get to 81, 82, that could still give us some upside. You can see I have highlight 80 to 81, and that is already 96 to 98 today. Our current support is located at 89K. You can see that we came to test it in here, and that's what is currently helping us to put a high. Momentum, although is quite diminishing at the moment on the daily, price action is looking very squashed as a result of a very boring weekend. Open interest seems to be challenging the 29 billion. Let's see if we are gonna get it to 30 billion, which will be another record in the history of open interest on Bitcoin. We've never been there. The previous bull market, we made it to 20 billion. So we are already almost 50% higher than that. And that makes a lot of sense because this is a new bull market with many more players and institutions. Distribution, no news. I won't explain what is this. I explain it pretty much every video. Go on and watch the previous videos and the tutorials as well. Long-term holders didn't do anything over the weekend, neither they accumulated, so no news from them. And wow, after the 3 white soldiers that we called out in early September, we could be potentially putting 3 new white soldiers in the chart, depending on how we close this week that we are just starting. And I was never expecting to see something like that. Indeed, I'm starting to get a bit itchy that we are leaving the bull market support band so far away from the price, because that tends to act as support. But you can see in terms of seasonality, in October, we say goodbye to the bull market support band, and we didn't touch it from October up until May in 2021. So imagine we didn't do anything with that up until May. May is somewhere roughly around here. So imagine the bull market support band continues to point up, and imagine the price doing something like this and then coming back and crashing all the way down. Let's mimic what we see in there. So that could take Bitcoin to 150K and then break below the band when it's at 120 and then have a huge crash to where we are. Not a forecast, I'm just showing you if we were to do the same thing that you see on the left hand side of the chart. That's just past performance, doesn't guarantee future one. And we closed the weekly RSI at 73. So we are officially on a weekly RSI above 70. Algos must be going crazy at the moment. Stochastic RSI is starting to close down the mouth for a potential slowdown, just like the RSI is also starting Monday with a very humble move up. And that is just a consequence that the momentum is slowing down where we are. We had a huge weekly candle first of 12K, followed by just 9K, and we start this week with barely 2K. Of course, the momentum is reflecting that. And so far this week, we still don't have any single big over 1 million liquidation. You can see that these liquidations are from last night. Both were longs, and that's about it. Those longs were probably liquidated somewhere in here. They were part of this cloud of people that entered too early on their long and they place their liquidity in here. This is a good example that small liquidity close to the price is always still at risk. And I don't think they came necessarily to take that liquidity. I don't think the market maker was thinking, oh, this is a huge amount of liquidity to take. Let's just go there and take it. They were probably thinking, if we go there, we are teasing people that we are gonna come here to 85, and many more are gonna put their risk placed in here. So let's just make them believe that. Let's make it look like we are breaking down from the symmetrical triangle. Let's do it intra-candle just for a fraction of a moment. We will get hundreds of them taking a short there. And then, given that we already have enough liquidity to push the price to 92.8, let's just do it. And that is precisely what happened. So, focus number 2. Do we have incentive to go higher? I will say that this is decent liquidity and very close to the price to just leave it there. There is a 1% chance we don't take it. I think 99 obviously that we are gonna take the red at the very least, the yellow maybe a little bit less probabilities, it's getting close to 94. But if we do go to 94 without first going into 85, then you can see in here that at 93.5, the blue liquidity starts becoming red. And then there is all this yellow. And if you compare those colors that are obviously more liquidity than what we have right below, and even what we have at 71K, then they just need to move the price 7K to take all that. But if they wanted to take a good chunk on the lower end, they have to go all the way to 71, and that is 21,000 moved down. Can they do that? Possibly. And at some point last night, with the news about Biden approving certain things, got me with my eyes open, and I promised myself that I will never ever, when I have these feelings, stop myself from at least saying on Telegram, guys, be careful. I'm not gonna tell you the news because I don't have a way to confirm the news. It could be manipulation. Any news can be manipulation. But if I have a strong feeling that is slightly negative, I'm gonna share it. Because when there was the FTX collapse on Sunday, I took my USDT out of FTX and I didn't feel like writing anything on Telegram, thinking that if I'm wrong, I might cause also losses to people deciding to close down their longs or whatever. But after there was the collapse of FTX, I felt quite guilty that I didn't share that gut feeling. The point is, if I'm wrong and nothing happens the day after with that call for caution, not a call for doing anything in particular, there should be no damage. You have to do your own research all the times. I'm just saying, heads up, look around, look what's going on, and take your own decisions. In my case, I just went to sleep with the trading bots switch off, and I missed this move up to 92.8 to possibly make a few thousand, which I really don't mind. Alright, the delta. Delta could give us a clue that there's still more upside. And I think the clue is that we are pretty low in the red in here. That means that there is huge amount of shorts. They are extremely exposed. Every time we get into this trend line, we bounce back up. And we are in an area that is a little bit mixed bag. I'm going to explain why. If we were in here, I will say, well, we could repeat the same performance that we have every time we bounce on the trend line. That's kind of the typical thing. But notice one thing. Each and every bounce from here is on the price putting a low. This was a low, this was a low, this was a low, low, low. In here, we are at a high. That is an exception that doesn't make this alpha as effective or as straightforward to say, yes, I will go for it. Number 2, we broke below the trend line, and we are well below the trend line. Even compared to this time in here, we are way beyond that. And this time here in July, when we went below that trend line, we have this move up, we hit the VWAP, and then we collapse all the way to 49K. And that helped the delta to reset to extreme lows, lower than anywhere in this range there. So it's kind of a mixed bag because this can continue going higher, recover above the trend line, and put a new high. Sure. And then we are all happy and we hit possibly 98K or 106K, and you could miss that explosion. Okay. That's scenario number 1. Scenario number 2 is the shorts come back this week with some bearish news. Biden continues freaking out the markets, spooking them, and the shorts become really cocky and they take control and they push this to a reset. In that case, I don't know, we take the CME gap, or maybe we go even beyond that depending on how bearish is the news. Talking about seasonality, we shouldn't expect something like that in November, okay? But seasonality is not everything. It's just a guide, and we are not gonna trade seasonality. I don't trade seasonality. I just use it as complementary information. It's not my main alpha, definitely not. So, summary on this: if you want to take a long from here and take the risk, do your own research, find a good entry, a small breakout in a lower time frame or something like that. Look for the liquidity that you're targeting and trade it, but with risk management, okay? If you're wrong, take a hit. Take just a small bullet that allows you to continue trading in the future. If you're conservative and you think that this doesn't provide the level of risk reward that you're used to, that you prefer, then look for another setup. Just move on. On the order book, we still have 100 million, over 100 million at 100K. That's still resistance. Liquidity right above us from the past 30 days reduces dramatically over 93.5. That doesn't mean that there isn't anything here, but the past 30 days have a big impact on short-term moves, and we can see that we are here and there is all this cloud, whereas below the price we need to move below 89 to trap something similar to this, okay, in terms of size. That's another clue that overlaps with what we are talking about of the close proximity here, low hanging fruit. In terms of fair value gaps, we have a few things that we need to talk about. We have two very thin fair value gaps below the price at 91 and at 90. Those are very easy to grab for the price to come back there and take them. My worry is if we fall below that 90K once again, all the liquidity below the price has already been taken and there is a vacuum that resumes from 85. Okay, so losing 90K can make a move down very fast. I'm not talking about likelihood, I'm talking about if we lose 90K. So assuming that has already happened and we have a candle close below 90, the trip to 85 is very sharp and impulsive. That is what I will expect. And that is also confirmed by this vacuum in here in liquidity. So you fall below 90 up until here and you kind of slip all the way to 85 very quickly. And that is all thanks to all the buckets in here are already gone, which makes it very slippery. The delta, it's been over a week that we don't see red. We've been over 1 million in delta for longs, and I'm very surprised that this has kind of disappeared overnight. So I'm not sure if this is a defect or a limitation on the liquidity pools on high block capital, that overnight we went from being still at 800K and now we are in here. Possibly what happened is that with this move down that we have to 88K, you can see that many shorts enter and they are contributing big to create now a delta that is in the negative. It's roughly now 180K. Remember, we did a high of 1.6 million to the upside of longs. We can say that the good news about this is that they are out of the way. This scenario that we are seeing in here helps the narrative of upside. It doesn't guarantee it, but is a point favoring more upside. And you can see that that upside is starting to play out from this particular candle today, Monday. We spent 1, 2, 3, 4, 5 days trying to conquer the last CPR resistance level of the month of November, and we couldn't. Which day we are able to be above and potentially close, and we have the highest likelihood of doing that. Today, delta is well negative. Shorts are in risk. That helps this thing to move up. Can it hold there? We don't know, but it's definitely at the moment helping to go to hunt those excessive shorts. Gold breakdown has made it below 58 and at the moment it seems to be testing the median, which is that 58 on the RSI, as a resistance. It is a lot clearer if we look at this, magnifying it, that we are testing it as resistance there. Hopefully we are not gonna see a new high because that invalidates our thesis of gold topping in October. Remember, my thesis was that this was going to be the top. Middle of October I call out for that, but I was wrong and we did a couple more green candles. Instead of the top being 27.21, the top could become 27.54. So $30 higher and 2 weeks late, but I'm still satisfied if this is the top because I'm not even expecting to call out properly for a top of an index because it's almost impossible to achieve. So don't trust me. And yes, guys, we closed the USDT dominance below the trend line, as you can see here. And this week we started from 4.3% and we are going down to 4.18 below the trend line. You can see that we closed once on the 1st of March on 2021 on the USDT dominance below this multi-year support trend line from 2017, end of 2017. And we are doing something that is completely uncharted territory. So someone should watch Benjamin Cowen's videos and check what he says about this, because this is really weird. Of course, trend lines are meant to be broken at some point, but I'm curious if this is necessarily driven by a rotation from stable coins into altcoins and Bitcoin, or if there is some ongoing rotation into other stable coins due to the regulation currently ongoing in Europe. I don't know. If it's the first one, of course, it's good news, and it could indicate that we are about to enter into a very strong altcoin season. After all, we spent 130 days in here right next to the trend line, and if we were to repeat that, that is your altcoin season. But if it's something else, of course, I want to know as well. Guys, tomorrow on the Coin Bureau Trading in the afternoon, we're gonna put out a video live with Annie from Trade Travel Chill. And I'm very happy to see that she made it to the top 1 in here of the best technical analysis Bitcoin YouTube or X channel. She won the number 1, and I decided to remove the trading parrot from this because the original intention of this wasn't for you guys to just give me likes and just feel myself better, which is completely silly and unfair, because obviously most of the people voting are from my own channel, so it doesn't make sense statistically speaking. But I wanted to know who you want me the most to make a collaboration in the future to do TA live and stuff like that. So I'm glad, guys, that you like Annie. I like her as well a lot. So I'm very happy tomorrow to do that live stream. Do not miss it. Subscribe Coin Bureau Trading so you can watch it there. That's where it's going to go live. And guys, if you want to trade Bitcoin, altcoins, my favorite exchanges are still Bybit and OKX. On Bybit, though, you have a massive bonus to unlock based on volume of $30,000 and the lowest fees to trade. This is the exchange I use the most for my bots and for my manual trading. The link is in the description. You have to use the link in order to get the benefits. But if you're sick and tired of needing KYC, showing ID, needing to install a VPN, go ahead, look into this exchange called Bluffing. I have a link in the description. I am using 2 accounts at the moment on Bluffing to trade with altcoins and another one to trade with Bitcoin. But if you want to open 10 accounts, that's all up to you. Just make sure that you use the link in the description, because we still have 4 days to give these bonuses for free, which are based just on deposit. So put $300, $100, $500, $1,000, $2,000, whichever amount you put, you get a nice bonus. Do it quick though, because it's really running out of users. It's only the first 100 users. See you in the next one. Bye bye.